We're working out with Scott Eldridge, CEO of Military Metals. They're listed on the stock exchange in Canada under MILI and on the OTCQB in the US under MILIS. Scott, good to have you with us today. We're at PDAC in Toronto, getting a little workout in. I'd like to know more about yourself. How did you become the CEO of Military Metals?
Well, definitely appreciate the opportunity to be here this morning. Last day of PDAC. It's been a very successful event for our company. A large number of one-on-ones with strategic and institutional investors. And it's nice to be receiving that amount of attention, given that Antimony is now in the spotlight. And in terms of my background, I originated out of the insurance industry, which I just found wasn't creative and wasn't international enough for me. So I decided to go back to school and did my MBA in corporate finance. And that catapulted me into the mining space. And I started off as a buy-side equity analyst for a German precious metals equity fund. I did that for a couple of years. And then I ran my own merchant banking firm, raising institutional capital out of mainland Europe for Canadian mining companies. And then for the last 7 years, I've been on the issuer side of the business. I started off as the CFO and VP finance for a company called Amarillo Gold. We developed a couple of gold assets in Brazil and sold the company to Hochschild for a win for the shareholders. And I've run a couple of gold companies. Our group's been involved in lithium. And then most recently, starting in September, we decided to put a pure play antimony vehicle together.
Scott, I know you've raised a couple of million, dollars for your projects over the past years and over your career. What advice would you give someone that's raising money, whether it's for mining, whether it's for a development in real estate, whether it's for an application, whatever it is? What are the key takeaways you took away from raising all that cash?
Good question. I mean, raising money, it's such a competitive landscape regardless of what sector it is. And I think you need to find a way to stand out. You need to find a way to differentiate from the pack. And that's a combination of a good board, good management, strong supportive shareholders, and as important, a very strong project. So what I always like to look at in the mining space, whether it was gold or antimony, is a project that was high margin, that could withstand price fluctuations. And just the more financially robust a project is, the easier it will be to attract capital.
Right. And in your position right now, why would you be the best person? Because I know you've been a CFO before. So to be the CEO, you have a little bit of different position, right? Obviously, your finance background helps you a lot. Why are you the best fit to be the CEO of Military Metals?
Well, I think first and foremost is the team. The CEO is not a one-man band whatsoever. There's not a successful company out there that doesn't have a powerful team. And as I said before, that's board, management, key shareholders, the CEO, CFO, VP, finance, chairman, VP exploration. All those important roles have to be fulfilled. And besides having a good team, the key there, in addition to that, is communication. The team has to be able to communicate well. So for Military Metals, we have projects in 3 different countries and boots on the ground in 3 countries. So communication is highly important there. And then as the CEO, I think it's very important to communicate the strategic vision of the company to everyone involved, all stakeholders. And I like to say that the CEO is also the chief strategy officer. And how do you communicate that strategy to everyone? And then the last thing I would mention is probably just following market trends, anticipation of where things might go. And that's why we went into the antimony space. We anticipated that there was a storm brewing that would lead to a dramatic increase in the metal price. And not that we had a crystal ball, but our anticipation was on point.
Right. So you definitely touched upon my next question, which I was going to ask about the anticipation, right? You were in gold, then lithium, and now you're more involved in antimony. Talk a bit about antimony and why it's so important and its crazy increase. I think it's up like 200%, like the spot price for antimony.
Yeah, so it's interesting for 2024, the top performing commodity was cocoa. And in a very close second place, but as the top performing metal, was antimony. So cocoa was up around 200%. Antimony was up around 193% for the calendar year last year. And it's already off to a great start this year. As of yesterday, the spot price is $52,000 a ton. Only 18 months ago, it was at $12,000 a ton.
Huge increase for sure.
Yeah.
So antimony, it is described as a military metal, or it's used in a lot of military applications. What exact, I guess, components of it is used in military? Like, what do they use it for, really?
Right. So antimony actually has three nicknames. One is the military metal. The second one is the hero metal, because it's accredited with saving a lot of soldiers' lives in World War I and II, because it's actually used as a fire retardant in soldiers' uniforms. And then third, it's called the fellow traveler, because it's associated with gold. But what's important to look at is what is the ratio of antimony to gold. And there's a lot of gold mines around the world that have antimony as a byproduct, but our three projects are all high-grade antimony with low-grade gold to give our shareholders leverage to the antimony price.
Right. So would gold still be something you would look at in your projects? Like, is it going to be like a decent percentage of those properties as well? Or
yeah, that's a great question. So our flagship asset in Slovakia has a Soviet-era resource on it that we're now working with SLR to convert that to an NI 43-101 resource.
Right.
And the Soviets did great work. We've gone through 2,000 pages worth of historical information, and the resource that they published, where the project was drilled out in the 1980s, and it was meant to become a mine. But when the Cold War ended in 1992, everyone put their shovels down and walked away. So you have a resource here where the mine was never actually built because of drop in demand for the metal. And the grade of the project is tremendous. It's 2.5% antimony with a 0.6 gram per ton gold credit. So my guess would be, depending on the metal prices, it's probably 80 to 90% revenue would be from antimony, and the remaining portion from gold. But that's a nice byproduct for us to have.
100%. That's pretty rare, because a lot of projects that I've seen that think for antimony, it's a more smaller percentage that they have in antimony, bigger percentage in gold. In your case, it's different. So you do stand out. But I'd like to know a bit more about the macro space. China banned exports of antimony. Talk a bit about that and how important it is. I think there's no production of antimony, or big productions of antimony, in Canada and the US, correct?
So in terms of the macro landscape, if you look at the supply side in relation to the demand side, so Russia, Tajikistan, and China, three unfriendly countries to the west, they collectively control 83% of the world's antimony mining reserves. And then China controls more than 50% of the world's smelting and refining of antimony. And that's so important, because at a mine site, you're producing a concentrate that requires further refining to become an industrial grade product. And China has now started to label critical metals that they want to hoard for themselves. They call them dual use metals. And the dual use means military and civilian applications. And they know full well that they control the market on a lot of these opaque, bespoke markets like antimony. And if they all of a sudden turn off the tap by banning exports, they've created a supply crunch, because the rest of the world hasn't been exploring for antimony for the last 2 or 3 decades. And that's what paints the picture for the opportunity for us.
Right. Does the current wars have something to do with antimony and the price going up? Like the fact that, in terms of macroeconomics, there's wars and there's Gaza happening. There was Ukraine and Russia. Did that make the price of antimony go up, or it has nothing to do with that?
I mean, it's multifaceted, but that's definitely part of it. And the U.S., as we've all seen on the news, they have been a strong contributor financially and with military inventories to the war in Ukraine. So you're basically in a situation here where supply is being cut off, but demand is increasing. And that's why we've seen the price just really go through the roof. And we don't really see any catalyst coming in the next 12 to 18 months that would change the dynamic. And coming out of PDAC here, we've been approached by defense companies in Europe that want to talk to us about offtake for the antimony. So it's a very hot topic, and a lot of these defense companies, they just can't get their hands on the raw material that they need to make their munitions. And antimony is so important there because it's used in 300 different munitions.
Wow. So they're already approaching you to potentially have an offtake agreement, which that means that if it was to produce one day antimony, then they would buy it directly from you guys. Is that what it means?
Yeah, that would be correct. And that would probably come along with some kind of a government-supported debt facility for project finance in the next couple of years, probably a strategic equity investment from that group. But we're totally in the driver's seat because this is such a precious project. And the European Union, just like the US, they're very focused on fostering these projects in their own backyard. So they're not reliant on China. The Western world wants to have more control over their key supply chains for critical minerals. And the only way to do that is to break away from China by building these projects in our own backyards.
Right. And in terms of your project, you recently announced acquisition, the Last Chance property. You want to go more into that story, how it happened, and why Nevada as well?
Right. So our flagship asset is in Slovakia, Troyerova. We've talked about that. Our second project is called West Gore. It's in Nova Scotia, Canada. And that was a producing asset during World War I. And then third is our Last Chance project in Nevada. I was just down there a couple of weeks ago, and that also had past production during World War I. So again, we offer our shareholders a diversified portfolio in top mining jurisdictions.
Scott, I know we all know wish for this to happen, but do you think there's a potential World War III coming up?
Well, we all certainly hope not. And all that remains to be seen. Nobody wishes for war times. But I think it's so important for the defense industry to basically, for a nation to protect its sovereign safety and identity, you need to have a strong military presence, whether you're actually going to flex your muscles or not. So you need to show your counterparts that you're capable of defending yourself. And I would argue, as a hockey proverb, the best offense is a good defense.
Yeah, of course. So you have a lot of experience, Scott. What would you say to the emerging generation that's coming into capital markets or mining? What advice would you give them?
Well, another great question. I mean, when I think back when I first started 17 years ago, the key for me was having actually two, not just one, but two good mentors. And just keep your eyes and your ears open, learn as much as you can, talk to as many people as you can. Don't be afraid to get on an airplane and travel. There's so many opportunities outside of the borders of Canada. I've traveled and worked in 40 different countries over my career, and learned something new in every project in every country that I've been to, and have a great network of investors that expands Europe, Canada, the US, in Australia. So I think just be energetic, be proactive, roll up your sleeves, and don't be afraid to get dirt under your nose.
100%. Is there anything else you'd like to add before we close this interview? Any milestones people need to look out for military metals for?
Yes. So we have SLR, the resource firm, working on transitioning the Soviet era resource on our flagship asset into Canadian NI 43-101 resource. And I just want to sort of quantify the value of the Soviet era resource. So at the current spot market for gold and antimony, there's more than $3 billion US worth of metal in the ground there. So there's a huge opportunity to unlock further value in the company by publishing that NI 43-101 resource, and that'll come out in the summer. But there will be some drilling leading up to that. So I'm really excited to get some high-grade intercepts out to the market, demonstrate some modern drilling on the project. And then once we have the resource, we'd immediately go into the preliminary economic assessment.
Right, so drilling happening, and then later on, NI 43-101 resource. And once you have that, you can really assess and see what the economic value, how much it's going to cost to take that antimony out, that, and get that to the market, correct?
Exactly. And, I'm excited about Slovakia because the project already has a national designation that the area is protected for mining. And that means that no other competing economic activity could ever come in there and potentially take that ground away from us. So it's designated for mining. So we have a very clear path in front of us of how we unlock shareholder value.
All right, well, we'll wish you all the best, and we'll keep working out here, but keep an eye out for MILI on the CSC. And in the US? What's your ticker?
OTCQB is MILIS.
MILIF on the OTCQB, and we'll throw all that information in this video. We'll also have their link in the comments or the description below. So thanks for watching, and we'll keep that workout going.
Thank you.